Well, welcome viewers and listeners to CHP Talks. Here again with another exciting guest, Jonathan Wellum from Burlington. And Jonathan, welcome to the show.
Thank you very much, Rod. It's wonderful to be here with you.
Yeah. And I'm going to tell folks a little bit about you in just 1 second here. Jonathan Wellum holds a Bachelor of Commerce and a Master of Business Administration degree from McMaster University, Bachelor of Science degree from the University of Waterloo. He completed his formal education with a Master of Arts degree in Theology and Philosophy from Trinity Evangelical Divinity School in Chicago. He also holds the designation of Chartered Financial Analyst, which is a CFA. In 1995, Jonathan was named Fund Manager of the Year. And by the way, folks, we're going to be talking about money today, money, finances, economics. But he was named Fund Manager of the Year by the Investment Executive magazine. And in 1997, he was awarded Fund Manager of the Year at the Canadian Mutual Fund Awards Gala. In addition, Jonathan was a recipient of Canada's Top 40 Under 40. He's currently a member of the McMaster University Investment Pool Committee. He is also a board member of the Canadian National Christian Foundation, based in Ottawa, Ontario, and he serves as an elder at Trinity Baptist Church in Burlington, Ontario. Jonathan has been married to his wife, Heidi, for 29 years, and they have 4 children, Joanna, Jonathan Jr., David, and Christina. And Jonathan is a founder of the investment firm Rocklinc, that's Rocklinc, and he's going to tell us more about Rocklinc during our discussion today. So again, Jonathan, welcome to the show.
Thank you very much, Rod. As I say, I'm really looking forward to speaking to you and also to your listeners.
Yeah, well, we're in troubled times. I think most people realize that wherever they fall in the spectrum of knowledge about COVID and the lockdowns, and wherever they stand on those things, all of us have bills to pay, and we have to put fuel in the tank. We need roof over our heads and something to eat on the table. All of those things are under threat from some of the challenges taking place today. So maybe I'll just let you launch in where you want to. I have some questions for you, but maybe you want to just sort of introduce what you do at Rocklinc and how you help people manage and some of the challenging decisions they have to make.
Sure, I'll give you a quick overview. I got into the investment business back in 1990, so I've been doing this now. I'm in my 33rd year, and I was in the mutual fund industry up until 2009, and I was with the company AIC Funds, and I was the chief investment officer, and in the last number of years, chief executive officer of that company. And that was a lot of fun. Through the 90s, 2000s, up until 2009, the mutual fund industry was booming, and people were converting from GICs and a lot of interest rate driven products into the mutual fund industry. And that was a lot of fun. And so we built a very large company that was primarily owned by Michael Lee Chin, who's become fairly well known in Canada. He's actually a billionaire now, and originally from Jamaica. He was an immigrant from Jamaica. And we worked well together and maintained a strong friendship. And so that was a fun business. We built that up to about 15 billion and then sold that to Manulife in 2009. So in 2010, I thought to myself, I've been running around the country. I've been in all sorts of offices in every major city in Canada and promoting funds. I thought, well, I'm going to set up my own investment company to look after some of my own capital and family, friends, and then just build a private wealth management company. So that's where I started in 2010, right at the beginning of 2010. So we're in our 13th year now. And basically was to look after families, friends, and then sort of build the business out from there. It's a very disciplined approach to wealth management. So we want to use a longer term value orientation, understand where we're investing. I mean, there's no shortcuts, no speculation, no sort of just buying short term trends and blips. Definitely use a Christian worldview, I'm a strong Christian, and practice that. I think that being a Christian with a Christian worldview helps me in the investment business. It gives me, I think, better clarity in terms of what's happening in the world and some of the challenges. And we want to invest, of course, ethically, not necessarily according to the ethics of our world, which is a big issue, which we might talk about later when you talk about ESG and all these buzzwords they have for ethics, but in many cases really have very little to do with biblical ethics. And so I wanted to have a company that was Christian oriented. And so all the employees now in the company started with just one other employee, a gal in administration that's worked with me for many years, Doretta. And so we started, and then we've just been adding people to the company. So we have 7 full-time people now, mostly in research, because that's really our claim to fame is research and unique investing. But we've also recently added in our sales area and are broadening our perspective and sort of doing a little more advertising out in the market, because I'm very concerned about wealth protection and how Christians are investing in particular. And given recent events too, the Emergencies Act and sort of the freezing of people's accounts and the wokeness of banks. And I mean, we're just looking at a country and corporations that are becoming quite anti-Christian, are quite against a sort of a Christian worldview. And so we increasingly saw the opportunity to offer some alternative products, alternative opportunities, but rooted in a Christian worldview and long-term disciplined investment principles. So that's what we've been doing the last sort of 13 years, but really I'd say the last 2-3 in particular, we've cranked it up. When COVID hit, we were all concerned, of course, right at the outset, as I think most Canadians were, but it didn't take too long. I mean, you can go back and look at our videos. Within a month or two, you could see this was being really overplayed, and it was less about health and much more about power and control. And that got us very concerned. And then when you had the lockdowns, which are devastating to much of the private sector, very concerned about that. And then we had a government go on a debt binge and to an extent that is unprecedented in terms of the debt levels. I mean, we are in Canada with an economy of about 2 trillion, I should say, about $2 trillion economy. I mean, we were running pretty close to 25% of that in deficits. So, close to $500 billion in deficits. And that was all supported by the printing of money, which makes it even worse that you don't go to the capital markets and actually raise the money through legitimate purposes. You just have the central bank print the money. So our money supply, went from $110 billion prior to COVID 2019 up to over $500 billion where it is now. And so, we see that, this idea that you can shut down production, limit work, and then fill that gap with, digital money, created from the ether, is ridiculous. And so that's raised a lot of concerns. And as we see now, as we saw in the United States and basically throughout the world, that's led to this inflation round that we're seeing, and largely driven by very poor policy decisions and a left-wing socialistic ideology. And which, if you have the lockdowns, it interferes with your production capabilities, supply chains, which we all know about now. This attack on energy, which is critical. If you're going to run a productive and growing economy, energy costs have to be kept low. You have to continue to invest capital in energy. And if you take capital out and you starve the energy sector and you regulate it to death and you drive up the cost, which is what we're seeing with this idea of transitioning to a green economy, energy costs go up and you're going to have a lot of inflation. So it's a very troubling time for investors as they look at what's happened here. The government's taken all this control. over a so-called health crisis. They now are over-regulating. It's only a matter of time before they continue to jack up taxes. I mean, taxes have been going up, but I think they could get much worse. And now we're seeing virtually no economic growth. I mean, in the United States, we've had 2 quarters of negative growth, which is the definition of a recession, contrary to what the Biden administration wants to say. And in Canada, I suspect our growth is virtually nothing also. And if you were to cut out the housing sector, it would be pathetic. So these are all concerns for people. So our focus is, how do we invest? How do we try to protect people's capital within this, monetary insanity? When we speak of monetary, money printing, interest rates, and the fiscal insanity, which would be the spending on the parts of the governments, which is completely out of control. Yeah. And this idea that deficits don't matter. Of course they matter, and budgets don't balance on their own. You have to have intelligent people operating the budgets, and so all of this. And I think people, you look at the Trudeau government, and you look at his cabinet, and you see, I mean, again, not to be unkind, but these are some of the most incompetent, ill-advised people that we've ever had running our country. And that's what happens when you select people based upon gender ideology. And so we haven't selected people on competence, and we don't promote people on merit. It becomes, driven by these woke ideologies. So it's a dangerous place to be in, I think, and I hope that Canadians will start to wake up and they see the extremity of the situation.
Yeah, very good. I went on your site yesterday, Rocklinc, and I saw your newsletter from March, and I was pretty impressed to see you taking a clear position regarding the Emergencies Act and the Truckers' Freedom Convoy and those types of things. Because a lot of times I think people in any kind of financial institution are very cautious to speak out on important issues like that, and the big banks probably even more so. That not only they don't speak out, but they become spokespeople for government policy, and I guess that's they're balancing their risk in terms of.
Yeah, and the banks are regulated, as you know, federally, and so I believe, I could be wrong on this, but I believe only Scotia Bank has apologized or done some type of apology for freezing of accounts. Again, I could be wrong, but I believe only Scotia. But as we found out, Rod, that and as anyone that went to Ottawa to see these events, I was not in Ottawa, but I have family members and many friends that went to Ottawa, and so forth. This was a very peaceful rally, and to evoke the Emergency Act was completely unwarranted, totally unwarranted. And as we found out in hearings on Parliament Hill, the police did not ask for it. The securities folks did not ask for it, and we were lied to. And this was made very clear in their own hearings on Parliament Hill. And so it's very serious when you invoke something that, with the extreme power of the Emergency Act, when it's completely and totally unwarranted, and it was only justified because they went against the government's position. So it is very concerning for investors, and we were very concerned. So my view is we need to speak out. We need to speak out carefully and with proper facts. But I love Canada, and I think it's a wonderful country that we've been blessed with. And we want to protect it, and so all of us have to do what we can to get the message out and to stand against this growing level of tyranny which we see in our country.
So, I think for some of our viewers and listeners, this whole concept of investment and planning, financial planning, that it may be more a matter of survival, month to month, and how do you stretch, especially with fuel prices going up, those types of things. So I don't know if people come to you who aren't in a position to, invest large amounts of money, but just want to ask you sort of a general question, and you can extrapolate from it. Financial planning, what's it like in this age of lockdowns, mandates, business closures, inflation, rising interest rates, supply shortages, and even possibly the threat of war? We see what's going on in Ukraine. That's concerning, and China's beating the drum there. So how has all that changed your approach, or has it changed your approach to investment in any way?
Yeah, I mean, in some ways, it hasn't changed the fundamentals, and then it has had some effect on where we are investing. So when you think of the basic philosophy people should have about investing or saving, I mean, you're really talking about basic investment principles that don't change, that are very much biblical principles of preparing for a rainy day, of being able to prepare for your family, to be disciplined in terms of how much debt you take on. Do not be driven by your wants and desires, but what your needs are. And so be very careful about sort of the consumer economy we're in. So I would say that in terms of our investment principles, when you're talking to someone who's closer to the wire, who doesn't have a lot of surplus capital, I think it's critical that they have a budget. They get down to a very disciplined budget, lay out what their needs are, be very careful about using too much debt. So saving first before you're buying things. And in the reality is you'll be much further ahead, because if you're using a lot of debt, it's going to become very expensive for you, especially consumer debt. I mean, if you're using debt up against a home, we know the interest rates became very low, and so the cost wasn't that high. And so when you're borrowing against a good capital asset like a home, that's much more prudent. But if you get into consumer loans or credit card debt, it is a brutally high expense in terms of the interest costs. And so you're really going to lose out over time and not have as much. So I'd say in terms of the basic principles, lay out a budget, know where you need, put down your core essential needs first and foremost. Be careful about, buying more than you need. Every time you make a major purchase, do your research, find out again what you really need, so that you're not getting pulled into buying cars that you don't need, or shopping and buying, you're getting more features. Again, you need to be razor-like everywhere you go. You'll end up much better off over time. That's the payoff, if you will, even when you don't have as much money. The other issue, I think you'll be much more settled in a home. Make sure a husband and wife, they sit down, they have a plan together, and they agree on it. And that will bring much more harmony and peace in the home. And that's very, very important, because, boy, if you get two people without a lot of money at each other, and it's not going to go well, it usually ends up causing budget issues or budget problems. And Lord forbid it causes a divorce, which is incredibly expensive and devastating to a home and to a family. And so, I really caution that. So I think those basic principles don't change. Where we're investing, because of the debt and because of the concerns over the government overreach and so forth, I'd say that where we're investing in terms of our portfolios, more hard assets. So what do I mean by that? Because we're concerned about inflation and the devaluation of our money because of the deficits in money printing and just the ideology, the sort of left-wing ideology that's infiltrated almost every area of our economy. We've been looking at, again, real estate, infrastructure companies, the basic industries. We actually like to say the oil and gas industry. We think there's, if they're going to hammer the industry and keep the price of oil up, then oil companies can be a great place to invest. Precious metals, having a certain percentage in gold, silver, is a hedge and will protect us over time. And basic consumer staples that people need. Technology, of course, is a very important industry. It's not going to go away. Everything's driven by technology. So we've geared ourselves to areas that are essential, scarce, very, very well-run companies, exceptionally strong balance sheets so they can weather the ups and downs of the market challenges. That's where our shift is really taking place. And for people who do have more capital, we are in the process of launching a fund that is going to be based in the Cayman Islands, which is probably the best jurisdiction, offshore jurisdiction for investment products. They're the dominant player. And people might say, well, why are you doing that? This is not to be, running from taxes. It's not to be hiding your money or anything like that. It's to put your money in an area that's regulated outside of Canada. And so Canadians can set up investment accounts outside the country. That means it'll be much harder for our government to get at them if they don't like your opinion. They were trying to censor you. And so one of the things that we've been saying to people is, okay, it's great, have some assets in Canada, but if you can own some real estate outside the country, the United States or someplace, you might come from another country and you are familiar with that country, that's great. Have an investment account outside the country. These are ways, again, to try to at least protect some of your assets from government overreach. And if you keep a second passport, that's also very helpful. A second residency. These are things that I think Canadians should think about. Unfortunately, our country is not as predictable and safe as it once was. And hopefully that changes. We need new governments. But those are the things that we're looking at from an investment perspective. The principles don't change. The application and kind of where we're going, we're trying to fit to the environment that we're in a little bit more.
I noticed in your newsletter or on your site that you avoid overinvestment or any heavy investment in banks and insurance companies. And I just wondered if that is risk driven. Is that a financial decision on your part, or is it a conscience driven choice, like to avoid, because these banks, of course, were complicit in the seizing of funds in this shameful use of the Emergencies Act. And but anyway, just maybe some comments about banks and insurance companies.
Yeah, to be honest with you, it's probably a bit of both, but it's primarily driven by investment risk. So if you think about the banks, one of the areas that if you talk to Canadians, they say, well, the safest area to invest in is banks. Well, that's true. That has been the case. But if you actually look at our economy now, which is very, very leveraged up or highly indebted, both consumer debt, corporate debt, and now government debt. Remember, the balance sheet of the banks, their asset is your liability. Okay, so their assets are mortgages. Their asset are your debt. And in my view, that's just not going to be a rewarding place to be in the future. Canadians have way too much debt. The real estate values are inflated. And so I think that with increasing interest rates, that's going to cause increasing loan provisions that the banks are going to have to take write-downs. I'm not saying they're going to blow up or anything like that, but I'm just thinking, I think it's dead money. I think the banks are very much dead money. And if you actually go back 5 years, they haven't really made much money for investors anyway. In terms of the Canadian banks, they sort of shot up earlier this year. Interest rates are going to go up, and so the theory is if interest rates go up, then they can make better spreads. But that's ignoring the fact that we're in a highly indebted civilization or country, and so I think as interest rates go up, it's going to kibosh the real estate market. And it's going to cause some write-downs and provisions. So I really don't like them from an investment perspective. I like financials, but not banks. I mean, I like investment companies that don't have that leverage and that risk. So I'm concerned about that. I think that their ability to grow their balance sheet, which means they have to grow more debt on the backs of the Canadian population, is just going to be very difficult because people are tapped out. When it comes to the insurance companies, really the life insurance companies, I would be very cautious about. If you're talking about, so when you look at when you look at insurance companies, I should say you can break them into two categories: property and casualty, like your home insurance, your auto insurance, and then life insurance. And so when I look at the life insurance, that's long-term insurance. They call that in our parlance, a long tail business. That means you're writing premiums, but the insurance company's not going to know exactly what the obligation is for maybe 20, 30 years, for a long time. And so I'm worried about that long tail business because interest rates are at a record low. I think with the COVID situation, I'm not sure what these vaccines are going to do to people and increase levels of death and so forth. We're already seeing that there's increase in cancers, there's increase in all sorts of things. We need to do this mass vaccination of populations. But we really don't know what we're in for. This is an experimental situation, the biggest health experiment probably in the history of the world.
Yes.
I'm hoping it doesn't lead to severe problems, but we have seen excess deaths go up. And so I'm concerned more in the environment of increasing interest rates and the unpredictability of some of their claims. Their underwriting risk is a little higher. And so my view again is, you know what, we don't need to be there, and I'm not sure that it's going to be overly profitable. But if you look at Manulife, for example, I mean, you haven't made any money for virtually 15, 16 years. I mean, they peaked out in 2007 and they're still trading below where they were. So there's a few life companies that have made a little bit of money over the last 12, 13 years if you owned all their stock through that whole period, but very few. So they've been dead money for some time. And I think it really gets down to the business risks that are there. And I think that risk has just gotten larger with the these mass gene therapy that has been put into our country. Again, I hope there isn't any more severe issues there, but those become, I think, from an investment point of view, one thing I've learned a long time ago is you don't have to be in any industry. You can avoid it in certain industries, and there's other opportunities. So we just look elsewhere. So the banks, I'm concerned about the mortgage situation and the indebtedness and their need to take provisions. In the life insurance, they have these long tail, liabilities. I'm not sure they've priced them correctly. And with low interest rates and the interest rates going up, they could be taking, write downs on their bond portfolios, things like that. So it's really driven by the fundamentals. And again, I'm not saying they're going to blow up or anything like that. I don't want anyone to misquote me, but I think they're going to be dead money. And in the case of life companies, they have been dead money for the last, literally 14, 15 years. So, and banks haven't done much for the last 5 or 6.
All right. Well, Jonathan, we're coming close to the end here. I'd like to give you an opportunity to tell the folks what they need to know, the things that, if there's something we have not covered yet in our review of the current financial situation. And also, of course, we want you to tell them how they can get a hold of you at Rocklinc if they want to have some more detailed discussion or personal application to some of the things you've been talking about here.
Sure, then that's great, Rod. Well, I think that that people, just because there are these challenges, and they are real, there's no question about it. We're facing real challenges, as we, have talked about. These are challenges largely because we have rejected God, we've rejected our Christian heritage, we've rejected biblical truth. We think we can substitute humanism, and we're really running a culture that I would refer to, as others have referred to, as it's a neo-pagan culture, very paganistic culture on so many levels. And we've seen that this has then infiltrated into all of our institutions. And the government in particular has become the dominant institution in our society. And back in 1960, 15%, 15% of our of the government spending was that proportion of GDP. 15% of GDP was government spending. In 2020, where it was a little elevated because of COVID, it was 52.5%. So, you think about the way we should be arranged as a culture. I mean, the government's a very important sphere, but then you have the family, the individual, the family, the church, you have corporations and so forth. These are all different spheres of, they should be spheres of autonomy. What's happened is that everything is now channeled through the government. The government really wants to oversee oversight of the church. He wants oversight of all the corporations. He wants to control the family. He wants to define what a family is, and so forth. And we see this complete breakdown. And so when you're looking at all that, you can become quite negative. And I understand that there's some certain days where you wonder, you just shake your head and say, Lord, have mercy on us. And of course, we should ask Lord to have mercy on us. But I think we still have to think long term. We have the biblical examples of this when things are very negative, very bad. The prophets, they'll speak to the children of the Lord, and they'll speak to Israel, and they'll say, you still think longer term. You still prepare for the long term. You have to trust the Lord. Yeah, we need to be concerned for our children, our grandchildren, which of course our leaders don't care less about that, but that's not the way we think. We think intergenerationally. We're the ones that should be the long-term thinkers. So I think what we need to do, again, is be very disciplined, have long-term plans, trust the Lord, anchor yourself in his word, make sure that your spiritual strength is as strong as possible so we can take on the wiles of the devil as they come at us, and especially through the state. And it shouldn't take you away from investing and setting money aside. There's nothing that says, the world's going to end tomorrow. We don't know. This is all in God's hands. And that's why we're optimistic despite the negativity. We're optimistic because we know that the Lord is the ruler of all kings. And we remember Psalm 2, and we believe it, and that the Lord is in the heavens and he's in complete control. And we look to him. So we keep investing, but we want to invest wisely, prudently. Let's look for areas that'll be protect us. Let's not just go into areas that could wipe us out. Don't fall, when you go into the banks or the big life companies which control our investment industry, they'll just tell you and buy index funds, buy ETFs, just spread your money everywhere. And then what they're not telling you is that your money's going into the hands of these mutual fund companies, the index fund providers, and ETFs that are all voting against you. They're controlling the corporate world through proxy voting, and they're voting in a very anti-Christian way. So I'd say set aside your money, find investment companies like Rocklinc and other independent firms that will take the time to do specific research, finding companies who will vote proxies based upon Christian ethics and value, and be very disciplined, and don't hand your money over to these big institutions which just treat you like a number. They don't give you any individualized, personalized attention, and certainly they're not attending to the portfolios in any kind of Christian manner. In fact, quite the opposite. They're actually subverting many of our Christian principles. And so that's sort of the advice I would give. In terms of contacting us, you can see right above my head there on the screen. It's just www.rocklinc.com, link with a C, which is important. And people can go on our website, check us out. You can see, find out what we've been saying for the last 13 years. It really hasn't changed. Or give us an email at info, just I-N-F-O, info@rocklinc.com. So it's very similar. Or you can send me an email. That's fine. I'd love to hear from you, and we'll follow up with you. And that's just J Wellum. So my last name, W-E-L-L-U-M. My first initial J is in Jonathan at rocklinc.com. And we'd love to hear from you. And on our website, you can get our phone numbers and contact us also. But yeah, we're here. We've got a strong, committed group of young professionals. And I'm the old guy, but I've got some wonderful late 20s, early 30s, some really wonderful Christian men and women in the organization. And yeah, we're full frontal assault on our industry, and trying to provide great products for people, and not backing off, and speaking out when we can to make sure that we're salt and light in the world that God has placed us.
Well, thank you very much, Jonathan. Great introduction to what you're doing there, and I look forward to speaking with you again. And I know that our viewers and listeners will have gained something from this conversation. In this, we're kind of going down the river, and we're going through the rapids in a canoe here, and we don't know where all the rocks are, but we do know where Rocklinc is, and so we know that folks are going to get some benefit from this. And in the days ahead, we wish you all the best in your company and your ability to help people weather the storm. So thanks so much. God bless you.
Yeah. Thank you very much, Rod. God bless you also.